Hello guys, it's Robbie here and welcome in this recap where I'm going to break down about the trade opportunities that has been showed up on Friday in New York session, both on EU and GU. And let's start everything with EURUSD and on the 4-hour markup. So what has happened at this point right here? What can we see on the 4-hour markup? Well, technically there was the daily demand zone mitigation which has caused the previous daily swing breakout structure to the upside at this point. And as you can see, there was liquidity just below the daily zone. At this point right here with this movement, which has happened on Wednesday or Thursday, 4-hour candle broken below this daily low point, but on the daily time frame it was a literally perfect liquidity sweeping candle, and at this point we couldn't know that. We wasn't 100% sure about that it was a sweep or a break. But as you can see on Monday, not Monday, on Friday, it has been a confirmed break because price has just continued its way down, caused a new breakout structure on the 4-hour time frame at this point. And after the liquidity sweep, it wasn't strong enough to reverse the price to the upside. It has just broken the structure to the downside. So technically, we could look for 50-minute supply zones at this point in this movement right here, and we could expect further continuations to the downside. This was our last recent 4-hour supply area. At this point, there is no zero to no inefficiency in this movement to the downside that has caused the last recent breakout structure, and technically we can identify this zone as the last recent valuable 4-hour supply area that has caused technically the flip of this demand area. So yeah, that's all based on the 4-hour time frame. Let's take a look on the 50-minute markup. So what has happened? Just a quick note on this about this movement right here. There was an extreme 15-minute demand which has been marked out on the 15-minute time frame, and I will mention it on the 15-minute time frame. So there was the 15-minute demand which has been showed on the 15-minute markup right here. So there was an extreme 15-minute demand which wasn't strong enough to hold the price, to reverse the price. It has reacted on it with really weak candles, really weak movement, and after this really weak movement, after this reaction, price has just flipped it, caused a really nice swing break of structure to the downside on the 15-minute time frame, and also caused the break of this demand area. And technically the flip of this movement, the swing break of structure, happened from two areas. This was the extreme of this whole flipping movement, and this was the decision which has started the bigger inefficiency, the bigger inefficient candle that has caused the swing break of structure and flip. Price has reversed from a middle of nowhere at this point, but it has been strong enough to flip the last recent supply area at this point, as you can see. And after the flip, technically price left behind a newly formed 15-minute demand area, where I was expecting long confirmations up to this supply area if price mitigated the 15-minute demand first at this point. Of course, I had one more possible scenario based on this 15-minute demand, which was the flip of this zone, and after the flip I would target this low point right here. I would target the potential breakout structure to the downside. At this point before the session, price was reacted on this 15-minute supply area that has caused the flip directly and caused the swing breakout structure directly. And as you can see, price reacting pretty well, only wigged above it. So technically we were able to look for entry opportunities based on this supply zone mitigation, but there was one issue with it. These candles right here were lunchtime areas, so we could not set a limit order on 1-minute areas at this point. So because of this one, because of these lunchtime areas, I was expecting a possible confirmation entry on the higher supply area, which has initiated this whole structure breaking movement and flipping movement to the downside. So I was expecting a confirmation entry here. If it would not happen, then I would look for long continuations up to some higher supply areas if price was able to flip this higher supply area. So yeah, technically that's all based on the markups. These were the scenarios that I was looking for in this session. And here we are on the real 15-minute trading view chart. And as you can see, session has started with this candle. This is the first candle of the session. There was a new breakout structure to the upside on the chart. As you can see, price reacted on the supply area, and also the flip has happened with this movement to the upside, and also there was a newly formed breakout structure to the upside, and I have marked this 15-minute demand out. Because of this 15-minute demand mitigation, I decided to delete my orders based on this 1-minute entry POIs. And let's take a look on the 15-minute time frame and what has happened based on the 1-minute time frame. On the 1-minute time frame, sorry. So we had really high impact news at 4 p.m. So 1 hour before session close. And after this movement, after this candle, technically the whole session's price action has been fucked up. So that's why I'm only showing you the first 2 hours of this trading session's movement. So yeah, as you can see, this 1-minute area that has caused technically the change of character at this point, it has been part of the lunchtime area. So technically we could not settle a limit order on this zone directly. Let me show you that. These are the lunchtime areas. These are the candles that has been formed in lunchtime area. But also it wasn't that really high probability setup for me. And yeah, these were lunchtime areas. We couldn't really set any order on them directly. And yeah, what happened after that? Technically, price has reacted on the higher supply area that I have been marked out, and the confirmations has showed up. Some of you has entered on this area, on this 1-minute supply that has caused the change of character here. There was nothing wrong with it. Technically, this was the real change of character to the downside because it has caused the last recent breakout structure here to the upside. This was the demand that has caused the breakout structure. But personally, I was waiting for a break of this 1-minute supply area. In the past, I believe there were several occasions where I have been swept out because of this movement. So if you take a look at this movement right here, technically there was a breakout structure. After that, price was consolidating at this point. A new breakout structure has happened from this weak demand area. And after this weak demand area, price was kept doing breakout structures over and over again. But this was a really slow movement at this point, and I did consider this movement as liquidity creation. So at this point, I wasn't 100% sure about this change of character right here. And because of this liquidity creation, because of this liquidity building movement, because of this slow movement right here, I decided to wait for a flip or a change of character of the next 1-minute demand area that has caused the breakout structure here. And the reason why I was expecting a break of this zone because of this liquidity creation. I was expecting that after this zone mitigation, if price had enough strength, then it would sweep me out on this zone right here, probably in break even if I entered right here. But I was expecting the sweep of this liquidity, and I wasn't 100% sure about this change of character right here. And that's the reason I was expecting a flip and the change of character right here. Technically, the flip and also the change of character has happened from this weak area, which has started the inefficiency. As you can see, this week was greater than the previous candle. And in this case, we are considering the inefficiency from the week, lowest point of the week. And right here, this is the inefficient gap for the weak area. And about that, technically, there was an extreme area for me, which has started the inefficient movement to the downside. And as you can see, I used a risk split order on these areas right here. Let's count the criteria because it was a great opportunity. However, after this 15-minute demand zone mitigation that has caused the breakout structure right here, I decided to delete my orders right here because of these volume candles, especially because of these volume candles. But to be honest, nothing really has indicated to delete my orders right here. It was my emotions, it was my psychology once again. And yeah, it happens. So let's count the criteria. First one, higher time frame zone mitigation. Second one, liquidity take. Technically, this was the liquidity take for the higher time frame. This was the liquidity for the higher time frame. And also we could identify liquidity here too. So there was liquidity take for the higher time frame area. We had inefficiency for both areas right here. And also we were in a pro trend. There is no doubt about it. Forward technically bearish and 50-minute was clearly bearish. So it's a clear pro trend criteria. Fifth one is the flip. And also we can identify this one as a change of character. So this was my fifth criteria. The sixth one was the V-shaped recovery price. V-shaped reacted after the full zone mitigation. And the seventh one was the 50% mitigation. Eighth one was liquidity target. Technically, this whole movement right here was liquidity creation for future short movements, and this low point was a middle of nowhere reversal. So technically, this was our seventh criteria, but I will just keep the number right here, and that's actually it was our eighth criteria. For the extreme, we had combined liquidation, so it would be our ninth criteria in this case, but in the criteria tracker, the 9 criteria is not coming from an opposite sided zone, which was missing for me in this case. So I did not count this criteria. There was corrective pullback strong pro movement. So this was our 9 criteria, and I had combined liquidation for the extreme. And technically the decision zone was the combined liquidation for the extreme area in this case. I did not count combined liquidation for the decision area, so technically it's 10 minus 1 criteria for the decision. So I had 9 criteria for the decision, and I have 10 criteria for the extreme. But once again, because of emotions, because of psychology, after this movement, after the 15-minute demand zone mitigation, I decided to delete my orders right here. But as you can see, it would have been a literally perfect tag on the decision. I would be able to close partials if I wanted to, but probably I would let it to run into this lower 15-minute demand area that has caused the flip of the previous supply area. And I was expecting the flip of this demand after this demand zone, after this decision zone mitigation. So yeah, and yeah, technically these were the entry opportunities. There was nothing wrong with the entry opportunity where some of you has entered on the first movement, on the first change of character. Let me show you that, but at first let me delete these drawings right here. So at this point right here on this supply area, there was nothing wrong with it, but I have just explained that why I was waiting for the break or the change of character on this low point, and it was because of this liquidity. So yeah, but there was nothing wrong with this entry opportunity right here. And yeah, technically that's all, guys. I'm going to stop the recording right now, and I'm going to record the next one about GU. So see you in the GU recap.